Good afternoon. I'm your host, Joanne Jobin with Vid Media, and today I'm delighted to once again welcome Arizona's Sonoran Copper Company. We are here today with CEO George Ogilvie and his team, who will update the audience on the company's progress since we last spoke. And I see there have been quite a few important updates, including your recent sale of the NSR on the Cactus project to Royal Gold. Now, before we start, I do want to remind you that if you have any questions for the company, and I'm sure there'll be many today, please place them into the Q&A tab located at the top near your chat sections. We will answer as many questions as possible at the end of the presentation. So without further ado, George, the stage is yours.
Thank you, Joanne, and thank you to Vid Media for the opportunity today to share the progress that we've made at the Cactus project. We do have a small slide deck that we'd like to run through. And of course, this is American copper for the American industry. And we're advancing the Cactus project in Arizona. Thank you, Alison. We do make some forward-looking statements, so I'll draw everybody's attention to the cautionary language. This presentation is on our website, so please review that language at your own discretion. I think a photograph speaks 1,000 words, and you can see here as part of the backdrop, we have a photograph looking north on the property. On the right-hand side, you can see the historical low-grade dumps that were part of the mining that took place in the 1970s and 80s. There's 220 million pounds of copper sitting in those surface stockpiles. And behind that, on the top right-hand side, you can see the old Sacaton mine today, which we call Cactus West. The mineralization here runs from the northeast corner at sort of 2 o'clock down to the southeast corner at 7 p.m., which is the trend down towards Park Salyer. And then up on the top left-hand side, you can see the old historical dry stack tailings that doesn't feature in any of our plans, but has been fully remediated by the Arizona Department of Environment and Quality. As you all know, this is a tier 1 jurisdiction. It's low risk. We put out a PEA last year with very robust economics. It's an open pit, low capital intensity, low execution risk. It's a brownfield site. There's no federal nexus. We already have significant permits, and we're only dealing with the state and the local municipality with that permitting process. We're well underway now, approximately 45% complete with our pre-feasibility study, which we envisage coming to the market in the second half of this year. So a little bit on the share capital structure. Obviously, we completed a very successful bought deal last year, November, which has been further followed up with the investment from Hudbay Minerals. Today, we currently have 148 million shares issued, 156 million fully diluted. Importantly, there's no debt, there's no warrants, and the company's sitting with a very strong treasury of approximately $40 million on the balance sheet. We'll talk a little bit shortly about Hudbay's investment, but obviously in those last two financings, we've seen Newton and Rio Tinto exercise their preemptive rights and maintain their 7.2% position in the company, which I think speaks volumes about their level of confidence in the project and the management team. There are 8 analysts currently covering the company, and the current consensus target price over the next 12 months is $3.78. We're currently trading at, I believe, around $2.02 Canadian, giving the company a market cap of approximately 300 million Canadian dollars. Thank you, Alison. So look, as you all know, I'm supported by a very strong cast of characters who've had tremendous success in previous companies that they've worked with throughout their careers. Since we last spoke, we have added to the corporate team. We brought in Nick Hayduk as VP Corporate Development and General Counsel. Nick and I worked together at Battle North, which was formerly Rubicon, where we had a very successful outcome for the company when it was ultimately sold to Evolution Mining for an all-cash offer of approximately 45% premium. Anyway, I'm going to hand over the floor to Nick to just introduce himself and give you a little bit of background on his experience.
Thanks a lot, George. I'm really happy to have joined the Arizona Sonoran team at such a critical juncture for the company and the Cactus Project. As a brief introduction, and you can probably pick it off the slide, I've spent the vast majority of my professional life in the mining industry in various senior legal and executive roles, including at Kinross Gold, Lundin Mining, and as George mentioned, Battle North Gold, where I last worked with himself and Nikolakakis. It's certainly great to be working with both of them again. The prospects for Arizona Sonoran and Cactus are very exciting, and I'm thrilled to be a member of the larger ASC team advancing such a compelling, executable critical mineral project with its robust fundamentals in an exceptional mining jurisdiction and with strong community support and other key stakeholder support. I very much look forward to the journey ahead. Back to you, George.
Thank you, Nick. Thank you for coming on board and sharing that with us. Alison, if we could go to the next slide, please. So look, with respect to the Hudbay transaction, when we put out the PEA last August, we were approached by numerous corporate development teams from strategics, Hudbay being one of those. They conducted significant due diligence, both in our data room and visiting the site. Every couple of weeks, we would jump on a call with them where we would run through a Q&A session based on all the questions they had from their time in the virtual data room. As you know, they completed the bought deal at a 15% premium to the 5-day VWAP, which was done therefore at $1.68. Since closing that deal, obviously the share price has continued to rise, and already on an unrealized basis, they've seen almost a 25% uplift in their investment. They also have an observer on the technical committee, which I think is going to stand both groups in good stead. Obviously, Copper World in Arizona, just south of Tucson, has some similarities, and we see synergies between the respective projects. So as we share our technical data with them, we would expect it to be a two-way street and receive some further technical information on how Copper World is moving along. There's no point in reinventing the wheel, and I think we can learn from one another. So that was great that we've got those investor rights in place as well. Hudbay, as you all know, is a proven mine operator. They're known for being very good mine builders. So for them to put in 20 million Canadian dollars into the company at a healthy premium, I think speaks volumes about their vote of confidence, both in the project and the management team. Just this morning, you would have also seen that a private seller sold their royalty to Royal Gold. Again, following the completion of their due diligence, they believed the 2.5% NSR was worth $55 million US. I do believe I saw on one of the billboards that somebody commented that if you look at the full value of the company based on that investment, you'd be looking at a total NSR in excess of $2 billion US. And if you assumed a 30% margin on that, it would be $660 million US or 950 million Canadian dollars. Bearing in mind today, the company market cap is 300 million Canadian. Nick and I have worked with Royal Gold in the past when we restructured Rubicon, where they were a major lender on the project. They agreed to the plan of arrangement, and ultimately they did see success there. So we've got a great relationship in working with them in the past. And of course, they could be a partial solution to any future project financing. And then lastly, with Newton and specifically Rio Tinto, as I said earlier, they are participating in all of our financings, continuing to follow their money either at spot or at a premium. And of course, I think that speaks great volumes about their confidence in the project moving forward, ultimately into production. Thank you, Alison. So look, it's been a transformational year in 2024 for Arizona Sonoran. I'm happy to report it was another year with no lost times. We've now been working on this project for close to 5 years with no lost time. And over that period of time, there's only one medical aid that I'm aware of. So safety continues to be at the forefront of every decision we make, particularly at the site. We've raised close to 60 million Canadian dollars in the last 4 months in what I would say are very volatile and difficult financial markets, particularly for juniors with development stage projects. So again, I think that speaks volumes for the market's confidence in this project and the management team. The PFS, as we'll touch on in the next couple of slides, obviously was very robust. We've grown this resource tremendously in the last 5 years, which we'll show in another slide. And of course, ESG and the social license that we maintain within the city of Casa Grande and Pinal County continues to, again, to be at the forefront of the business decisions that we make. Thank you, Alison. So we've come a long way in 5 years. It was a surface rehandling exercise in 2020. We had 219 million pounds of copper in the ground. I don't think anyone could have envisaged that over 5 years with infill drilling and pure exploration, we would have grown this resource to 11 billion pounds. The good news is, as we believe there's significantly more copper to be found on this claims that we haven't explored the entire property. But I think it would be fair to say now that we have 11 billion pounds, really the monies that we have in our treasury is going to go into infill drilling and de-risking the project through further technical studies. So no exploration going forward, at least for the next couple of years, until we get beyond the definitive feasibility study. Believe it or not, our discovery cost on this project is under 1 cent a pound of copper, which I think tells us that at some future juncture at the right time, we do need to continue to explore on this property. Thank you, Alison. So when we put out the PEA in August, we used a $3.90 copper price. Today, the long-term consensus price for copper is $4.20. When you look at the sensitivity tables for this PEA, every 50-cent increment in copper price moves the NPV by $700 million and the IRR by 5%. So for a $4.40 copper price, you'd be looking at $2.7 billion and an IRR at 29%. And of course, at $3.90, we're generating over $7 billion in unlevered free cash flow. I think the transformation, as we all know, came from the acquisition of Mainspring, which allows us to open pit Mainspring, takes us down into Park Salia, which previously was being envisaged as an underground mine and now becomes an open pit with lower sustaining capital, lower operating costs. We can therefore lower the cutoff grade, bring in more economically viable mineralization into the mine plan, increase the production profile, and push out the life of mine. So 94% of all the tons we will mine on this property now will be open pit tons, low execution risk, low sustaining capital, and obviously from a capital intensity perspective, in the first quartile, much lower than $10,000 a ton of cathode. Thank you, Alison. What keeps the capital intensity low is that we're very fortunate to be in a very rich area for infrastructure. So this project, remember, came with water rights to the year 2070. The water in the ground is not potable. It's only fit for industrial purposes, and there's no federal nexus. For those of you who know Arizona well, there's a nuclear power plant west of Phoenix called Palo Verde. Several of those main transmission lines run right through our property, including a 69 kVA line with more than enough excess capacity on it for all of our current business needs. When ASARCO mined here, it was concentrate. They sent out a con. There's a rail line on the property. The Union Pacific Southern Rail Line is right on our southern border. Obviously, with access to green power and rail, that will significantly reduce our greenhouse gas emissions and our carbon footprint, which is obviously very important from an ESG perspective, particularly if we're planning for this copper cathode to go into the, decarbonization and the green energy thesis. And as we've said before, permitting is very simplified. the fact there's no federal nexus. When we make applications for permits, within 6 months of the permit being administratively accepted, we generally get our permits, and the longest we've had to wait for any permit was an amendment to the Aquifer Protection Permit, which took 5 months. And I think last year, November, you'll have seen we announced that we got our amended industrial air permit from Pinell County, and that took 4 months. Thank you, Alison. So I think the key takeaway on this slide is we really feel now that the share price is beginning to gather momentum. We're seeing much improved liquidities and growth, and we're really starting to see an accumulation around that $2 sort of Canadian share price. We've had conversations in the last several weeks with a few of the quantitative analysts who, look at these type of trading patterns, and we believe that if we can break through $2.30, there's every opportunity that the stock can run as high as $4 within the next 12 to 24 months. So still significant uplift from these levels, despite seeing, a nice run in the share price in the last 2 to 3 months as the company continues to execute on its plans. Thank you, Alison. And that leads me into Bernie, who's going to give us an update on 2025.
Hi, everybody. Thanks for joining us today. My name is Bernie Loyer, Senior VP Projects for ASU. We've got about 4 slides to go through, and it'll attempt to capsulize what the work plan for 2025 and onward looks like, both in terms of actual actions and some of the objectives go along with that. So on the front end of that program for 2025, we kick off a drill program that's already in process, led by our Chris White and the exploration team. And that's going to constitute about 130,000 feet of program, both at Park Cellular and Cactus West. And all of that is as required to complete the infill program, which is, everybody knows, is prerequisite to the PFS study, which is also in process. In contrast, on the back end of the year, we initiate the measured drill program, which will be required by the 2026 feasibility study and its proposed execution plan. So the scope and footage of that program will be determined by a number of factors, including, the results of the infill program, and the early mine plan and production profile is determined by the current study. So if you'll go on to the next slide there, Allison. So as most of you know, in August 2024, we completed the PEA. And so really after a short breather, we commissioned the next level of study, the PFS, both in terms of its schedule and study team. We're into it today by about 20 weeks. So depending on how you gauge it, somewhere in the neighborhood of 40% advance. The study initiated with quite a few trade-offs. We want to get these trade-offs nailed because once we move on to that next level of study, we'll really be filling in the blanks with some of the detailed engineering. So some of which yet continue, along with the metallurgical test programs and geotechnical hydrogeological investigations are ongoing as well. With the completion of the PFS, the study team then will roll directly into the DFS, and that is currently scheduled for completion in second half 2026. If we're going to make that schedule, we need to kick it off somewhere August, September of this year. So next slide there, Allison. So that completed PFS, second half 2025, will generate the information and data required to renew the permit application in the second half of 2025. So we say renew because the project is currently permitted in alignment with the 2021 PEA configuration. That renewal and process will include the industrial air permit, the air quality dust permit, both of those with Pinell County, and the aquifer protection permit with Arizona's Department of Environmental Quality. So that submittal and application will begin coincident with the completion of the PFS So in second half 2025. Next slide, Allison. So this final slide tries to capture in the form of a graphic what we just sort of went through. And you can see over on the left what we really worked our way through in 2024. And in 2025, some of those key milestones that are queued up for completion, many of them, the top two, well, the first one already in process, as well the PFS, which will complete mid-year-ish. And then, of course, we'll begin the permitting and as well initiate the DFS. So we take a look at 2026, and we know mid-year we want to complete that DFS. That should set the stage for project financing and a construction decision. We know typical for this size of plant, we're looking at an 18 to 24 month construction timeframe. And that sort of sets the stage, assuming we kick off that 18 to 24 month late in 2026. That sort of sets the stage per our master schedule for first cathode production late, let's call it third, fourth quarter 2029. And that sort of summarizes what 2025 looks like in the next couple of years.
Thanks, Bernie. My name is Nikolakakis. I'm the Chief Financial Officer of the company. This year is a transformative year for the organization. We're currently in the process of appointing a financial advisor to assist us with the project financing for the organization, and we hope to have that group in place in the first half of this year. Supporting the project financing are exceptionally good economics. We have an industry-leading net present value to CapEx of 3.0 times. As a reference, our target is 1.0 times. So we're incredibly pleased with the 3 times value. It really suggests that we will be delivering value to the shareholder for every dollar deployed. We have a strong IRR at 24%, and we have $2 billion of projected cash flows in years 1 to 10 at a $3.90 copper price. And we are projecting a long life asset of plus 30 years and life of mine cash flows of $7.3 billion, all of which are very conducive to attracting low-cost financing for the organization. The 2024 PA economics provide a strong platform, and we're expecting that to continue as we develop our PFS and our definitive feasibility study. And our goal is to have the project financing in place at or close to the conclusion of the definitive feasibility study. The company is pursuing a number of avenues with respect to the financing. We enjoy very good relationships with traditional project finance banks, export credit agencies. We'll be looking at equipment lease financing, offtake providers, and of course, as George mentioned earlier, we now have the benefit of having exceptionally good strategic partners, and of course, we'll be exploring financing opportunities with them as well. Next page, please. You'll see us go through a number of slides with respect to the metrics. The one thing that we wanted to stress with respect to the metrics is no matter what metric we use, you'll see that it really demonstrates tremendous value enhancement as we de-risk the project and move it closer and closer to a development decision. And as you can see in this particular slide, we looked at enterprise value on the numerator, and on the denominator we have measured and indicated resources. We're currently sitting at 0.024 times. It's not unusual to be in this range, but we believe we'll be making a very strong move towards the rest of our peers just to the left of us as we continue to de-risk the project and advance it. Next slide, please. There are a number of metrics on this page. We'll draw your attention to the PNAV multiple, which is obviously something that investors look towards. We're currently trading at a consensus PNAV of 0.2 times, which is well below our peer group. We believe we have a clear path to growth with respect to the PNAV, and we anticipate that to grow towards that 0.4 to 0.5 times. So when you hear us make the argument about the fact that we believe that this is an excellent time to invest in the organization, we look to these drivers and these value drivers to really make the case in point. And you'll see here, we have exceptional economics for the project at 24% IRR, a net present value of $2 billion. And we are working very, very hard to maintain that value as we move towards the PFS and the definitive feasibility study. And it bodes well for our investors as we continue to invest or advance the project. Next slide, please. This is yet just another example of where we think there's going to be significant value. You can see that our enterprise value currently sits at $175 million, and this compares against a project valuation of $2 billion. Clearly, there are risk factors that are embedded in our current market cap. But again, as we continue to advance the project and de-risk the project, we believe we'll be moving very rapidly towards the left-hand side of this table. And here's an important point. We believe we can do that within a 1 or 2 year time frame, given where we are in our life cycle. So this isn't a projection, 4 or 5 years down the road. These are our projections a year or two down the road.
Thank you, Nick. So as per the PEA, with average annual production of 86,000 short tons of copper cathode, or 172 million pounds of copper a year, if we look at the top 10 copper producers in the US today, and of course most of them are in Arizona, this asset, Cactus Project, was set at number 5 in that production profile. And if we looked at the first 20 years, where cathode production could be as high as 250 million pounds annually, it would certainly sit higher than number 5, as we're currently showing. You'll also notice in the table that most of those other assets are controlled by most of the majors. Obviously, Arizona, predominantly Freeport-McMoRan, and you've got a few others there with Capstone, Grupo Mexico, etc., etc. What I also like about this chart is that when you look at our total recovery based on total copper, and you look at our grades in the bottom right-hand chart, it's very much in line with what we see from other producing assets within the state. And that's a really good sign when junior companies come up with results that are very much in line with what mid-tiers and senior producers are actually doing under commercial production circumstances. Thank you, Alison. From a macro perspective, obviously there's a lot of volatility out there, and with the Trump administration now coming into power, we're seeing a lot of executive orders. I'm sure everybody's well aware of potentially the tariffs which are going to impact imported goods into the US. We're starting now to see significant spreads between the COMEX and the London Metal Exchange, particularly with respect to copper. I think people are beginning to suspect that perhaps tariffs are going to be put on copper, similar to what has happened with aluminum and steel. Subsequently, COMEX inventories are rising as people move physical metal from other areas into the world into the COMEX. And I think I saw somewhere this morning that the premium being paid for copper on COMEX is $1,000 a ton higher than what we see on the LME. So my message here is that I always felt copper cathode within the US for US domestic consumption, without having to go for further refinement or smelting to some other place in the world offshore, was already going to be a very, very valuable asset before the administrative change last year with the US election. Now that that has occurred, and we're seeing policies coming in from the Trump administration that are very protective of the US and access to critical minerals, I believe this copper cathode that we'll be producing here in the next several years is going to be even more valuable than what I just outlined for those very, very reasons. Thank you, Alison. And look, lastly, just to recap, it's a high value proposition. This is a large copper porphyry system. It's a former producing mine. It has many knowns, very few unknowns. It's a tier 1 location. There's lots of future opportunities here, both with exploration and synergies within the regional area. I think the PEA that we put out last August was very robust with very strong economics. It shows that the company is very, very undervalued. And then when you look at the risk aspect, this is a project that is absolutely executable on the next 5 years. If that wasn't the case, Royal Gold and Hudbay would not be investing in Arizona Sonoran and this specific project. It's open pit, which means low execution, low capital costs, low sustaining capital, low operating costs. It's all on private land with access to water, no federal nexus, and we continue to maintain a very, very strong social license. So with that, that concludes the formal part of the presentation. And Joanne, I'm happy to open up the floor and answer questions from myself and my team.
Thank you so much, George. And thank you for a fantastic update as usual. You know, we have another nice full house today. Well done, everyone, and thanks for tuning in. And so we'll take the questions from the audience. Again, it's just a reminder before we start to please place your Q&A in the tab. It's located at the top near the chat section. And George has gone through a very, very fulsome presentation. So some of these questions may have already been answered in your presentation. And the first question today is, why did you put the shareholder rights plan in place?
Well, it's a good question. And I think as per the press release, when we put the shareholder rights plan in, we felt that the company is still very, very undervalued. And last year when we put the PEA out, we had a hell of a lot of inbound calls from various strategics and corporate development groups interested in the project. We had a lot of discussion as a board about how the market would perceive the investment from Hudbay and whether that would, kind of chase people away or, see less interest in the project. And in actual fact, it was quite the opposite. After we announced the Hudbay transaction, the level of inbound calls that we're getting actually increased tremendously. And I think that's, from what we said earlier, the real vote of confidence, the vote of validation and credibility that the Hudbay investment gave us. So for those reasons, and particularly being very, very undervalued, we wanted to prevent any opportunistic predatory party out there from acquiring the company without offering maximum value to the shareholders of the company. And as we've said on the presentation, we believe there's still a significant re-rate from the levels of approximately $2 a share. So in essence, it was put in place to protect the value for all of the shareholders of the company.
Okay, the next question. The DOE and the DOD, have you been able to access any funds from these two important groups in the US, or are you even talking to them?
Yeah, maybe I'll hand that one over to Nikolakakis, who's had conversations with one of those groups.
Yeah, thanks very much for the question. We have, in fact, started looking at opportunities with both the DOE and the DOD, and we've identified an individual that's going to assist us with that process. We are just trying to get the lay of the land with respect to the new orders coming in with the new president. But we do believe that given that we have a critical mineral project in the U.S. for U.S. consumption, that we'll be able to access those funds, and we'll be working on that as part of the project financing.
Excellent. Next question. When can we expect MET results from Newton on sulfide recovery?
Bernie, would you like to jump in and take that one?
Sure. So currently, we're engaged in study work, or test work that's going on outside of Melbourne, and being orchestrated by Newton. That program, that overall program, and the analysis is about a 14-month program. So we track that into against our master schedule. So I think tentatively it looks like it's completed by, early in the second quarter of 2026. So as with, at least per that program, and consistent with, what the PEA encompassed that we published back in August, this current study isn't intended to encompass any upside or contribution from the application of Newton technology. So it's still out there about 10, 12 months in terms of the results.
Okay, thank you very much. Next question. How much does a PFS cost, and how much extra expenditure is needed to get to the DFS stage? And can AI help with all of this?
Yeah. Well, there's a general rule of thumb that a pre-feasibility study should cost between 1 to 1.5% of the total development or upfront capital. So in our situation for this year's budget, we actually have about just under $7 million US dollars allocated to the completion of our PFS. And then if you think about the $668 million of upfront capital, that would be, just over 1%. We, of course, have completed a PFS in the past and other technical studies on this project, which therefore helps minimize the cost. And Joanne, what was the second part of that question?
Oh, goodness, I archived it. And can AI help? That's what it was. Sorry.
We're not using AI at this juncture in time, but certainly I think, that is definitely a valuable tool that I think the industry needs to be pursuing as we go forward. Absolutely.
Okay. So we're getting quite a few questions around labor and the workforce. So let me try to combine these two questions. So how many direct full-time jobs do you think you will be bringing to the area? And the other question that is in tune with this is, what size of workforce do you anticipate that you will be needing during the construction phase?
Yeah, maybe I'm going to pass this one over to Bernie, if he could.
Okay, thanks. Yeah, so we think static, once this facility is up and running, that the workforce, because it's a seven day a week operation, probably in the realm in terms of direct labor, 300 to 350. Of course, there's a lot of indirect that supplements that in the form of support businesses, many of them that are already located here because of some of the other producers in the immediate region. So, and then in terms of construction, going through this study now will help us understand what that peak manpower requirement is for the actual construction. And there are several points of overlap. Of course, one of the first things we have to do is the pre-strip component. So that's sort of a focused effort, and we know how many tons we need to move per day. But when we look at all of that in conjunction with the dry side facility, the building of the leach pad, and the tank house and facility, you're in the range of 350 to 450 in terms of total head count during the construction period. And again, some of that is just by virtue of overlap. So in other words, you'd be buttoning up the amount of pre-strip required as you're sort of ramping that down and starting the build on on the dry side plant and leach pad.
And what is the labor situation like now?
Well, I mean, we're outside. I think it's characterized today as the 8th largest metropolitan area in the United States. So, and of course, a lot of our neighborhood consist of people with mining backgrounds that work the areas up around Ray and Pinal Valley, Globe, Miami, Hayden, Kearney, and a lot of those people have relocated their families to the east, what we call the East Valley. So that's our neighborhood. I just don't envision that there's going to be a lot of difficulty with staffing up in terms of manpower, considering where we're positioned. This is really getting to the point where it's a bedroom community for Phoenix.
Okay. And I do have one other question, and that has to do with, maybe you can talk a little bit about some of the scholarship programs that the company is working on in the area for, I mean, we did the same at our conference for sustainability efforts.
Yeah. Well, look, Bernie raised a great point. We're in a great jurisdiction, and we certainly believe that we can attract, a lot of labor to this project. I would suspect, however, that we're going to have to train those individuals. We all know, mining does pay higher wages and salaries than, your typical, perhaps, job. And that comes at a cost. So we definitely see education and training as being a big part of our business going forward to attract people to the industry. And for those very reasons, just in the last month, we've actually provided, I think it was about a $35,000 grant to the Arizona State University for a scholarship program for engineering students that ultimately can come into our industry. Of course, we're a very small company. We're not generating any revenue. So it's a very small donation, but hopefully it's seen as the beginnings of Arizona Sonoran participating and working with the colleges and universities to actually develop the skilled labor that's going to be required for the mining industry and for Arizona Sonoran in general.
Excellent. All right, let's go back to the property now. So how is the process going to expand your land purchase in and around the operation?
Yeah, well, we did show in the PEA that, additional land would be required. But as we said before, there's nothing conclusive at the moment that we actually require additional land. So, for example, in the PEA, once we mine Park Salyer in year 7, we start up Cactus West, and the 2 open pits actually overlap one another. So part of those trade-off studies that Bernie is actually looking at is things like what happens if we sequence the open pits back to back with one another. I mean, if we mine 1.5 to 2 billion tons of ore and waste out of Park Salyer, and then we go over to mine Cactus West, it makes perfect sense that we take any of that waste material from Cactus West and also what's already sitting on surface, and we start filling in and reclaiming, Park Salyer while we're in actual operation. So my response to that is, it is not conclusive at this juncture in time that we need any additional land. And until we've worked through those trade-off studies, we won't really know our path forward with respect to land.
Thank you, George. Now, next question has to do with geology. What is the average depth of holes in the PFS drilling? And are any deep holes planned underneath the primary deposits?
Well, it's a good question. I mean, obviously at Park Salyer, on the southern portion of Park Salyer, we have mineralization within 42 meters or 150 feet of surface. And then at the northern extent, we've got mineralization down to about 700 meters, sort of 2,800 feet. And we see those sort of similar depths over at Cactus West and Cactus East. We have drilled below the primary material, And at that juncture, we always hit the basement fault. And below the basement fault, we find no mineralization at this juncture. So, we think as far as the depths are concerned, at least on our side of the property boundary, we know the extents of the mineralization.
Excellent. Let's talk about your shares. Shares are still attractive on an absolute and relative basis. So have insiders been buying in the last 12 months?
Absolutely, yes. Insiders have been buying in the last 12 months. Actually, Bernie himself was buying shares in the last couple of weeks. And then last year on the back of the PEA, all of the executive management team and some members of the board were buying shares. And then in the last bought deal in October, November, I participated with another 150,000 Canadian dollars of investment, which at that time was another 100,000 shares. So yes, management and the board in the last 12 months have been buying shares either on the market or in various financings.
Excellent. Ivanhoe Electric. Are there assets, as a close neighbor, are you thinking of an amalgamation or an M&A? Would that make sense at some point in the future? I think this is a question that you get many, many times, George, but people always want to hear, what the lay of the land is with your very big neighbor.
Yeah. Well, look, if we go down to the project level, I can tell you that Bernie and his team are in regular dialogue with, the Santa Cruz project team next door. There's obviously some immediate synergies. And of course, we're trying to explore those. I think at the corporate level, there's still too much of a valuation gap between the respective companies. We're happy that we're now a 300 million Canadian or a 200 million US dollar market cap company, but we're still only trading at 0.1 to 0.2 times price to NAV, where as our neighbors to the south are trading at much, much higher multiples. So at this juncture in time for ourselves, an M&A transaction just doesn't make sense. However, as both projects continue to advance and be de-risked, I would certainly say that there could be an opportunity at some future juncture where doing a regional roll-up and taking advantage of all of those synergies would absolutely make the most sense. But I think the Arizona Sonora shareholders will want to see a much stronger share price and expect a significant premium on any M&A transaction.
Agreed. We've only got a few more questions left. Given that the Newton technology is primarily going to be applied to the sulfides, which do not get mined until year 8 and beyond, is it an important catalyst?
Well, look, I would say after the delivery of the PEA, I would say from an economics perspective, I'd say no. The PEA that we put out was purely a standalone business case without Newton. And it certainly shows that the project can stand on its own 2 feet and is definitely project financeable. I think where Newton actually brings a lot of benefit, however, it is cutting edge technology that, if successful on this site, could actually be applied to other projects where it could have a much, much bigger economic impact. But from a production profile as well, it could actually make a substantial difference to the production profile, but it would principally take place beyond year 15. And of course, in these DCF models, when you're discounting 8%, once you get out beyond year 10 and 12, it really doesn't make a difference to things like NPV and IRR, which probably are not good metrics to measure against. But as far as the mine's latter years copper production is concerned, Newton could make a big positive difference there. And of course, if we can successfully treat primary sulfides using a leaching technology, that's going to reduce greenhouse gas emissions. It's going to reduce energy consumption. It's going to reduce water usage, We don't have to take concentrates around the world with all of those, costs and all of that carbon emissions to go to smelters, which typically today are sitting out in Asia, only to be then shipped back, to the rest of the Northern Hemisphere or the Western world. So I really see a big place for Newton, within the mining industry. And we'd certainly like to be a successful part of that.
Okay, next question. Thoughts on taking on a partner like HBM plans to do with Copper World?
Well, no specific plans at the moment. I think we've got to get the pre-feasibility study out the door and take a look at, the mine plan built then off of mineable reserves and the financial and economic model. And then as part of that exercise that Nick spoke about earlier about, shortly announcing a project financial advisor, bringing in, some of the commercial banks and other lenders under NDAs into a data room to start that project financing exercise, that probably or could potentially open up opportunities for, potentially minority or other potential, partners on the project at that juncture in time, but we're just not quite there yet.
Okay, almost at the end of our Q&A here. This is a great question, actually. What is the question you would like to answer that none of us asked?
Oh.
Any takers?
Nick, you want to jump in there?
So, well, here's a question that is something that management debates quite frequently. We've been making a very strong argument about our valuation, particularly relative to our peer groups. And one of the questions that we always have is, how do we attract investment interest into a story that we know has tremendous room for growth, particularly when we look at the value metrics. And that's exactly what we've been working hard to demonstrate. And we've seen some of that growth recently. Our last equity offering that was done in October, those shareholders and now enjoy a 45% return on that investment in a short 4 months. And I think our response to our potential investors is we're not done yet. We're going to be working very, very hard to make sure that those opportunities exist for investors at any part of the entry spectrum. And so the question that we always have is, how do we attract interest into the story? And I think we're attempting to answer some of those questions, and we hope we were able to answer some of those questions for you to demonstrate that this is really a compelling investment case, particularly when you look at our valuation relative to our peers, and moreover, and then when you start looking at, of course, our locational advantage, the fact that this is a historic site with existing infrastructure that George pointed out, what it really points to is a much lower risk project and easier path to execution.
Excellent. And really, as you know, I've been in IR and capital markets for many, many years. And I always say to companies, you have to keep telling your story. You never know when things are going to turn around or things are going, a lot of it is timing. A lot of it is, like with you guys right now with the Trump administration coming in. I mean, it's really playing into the strengths that you've had all along. People are just looking at you in a different way right now, I would say.
Exactly.
All right. And the last question is mine, and that is, I always like to ask this. So where do you really see the company in the next 3 to 5 years? I mean, you guys are in an incredible position right now. It feels like you're on the precipice of a momentous climb, but, there's a lot of different ways this can go. So it's not just where do you see the company, but where would you like to see the company in 3 to 5 years?
Well, Joanne, you've heard me say this before, but, I've built the management team and the project team on the basis that, we would go through all the technical reports, take it through construction and development, probably with an EPC or maybe even an EPCM group. And we've got the basis here of a very strong mine operational team who can put this mine into production in the next 2 to 3 years and build a really solid, copper producer right in the heartland of the Arizona copper belt at a time when the world, and particularly the US, is going to be crying out for copper. If I could wave a magic wand, that would be my preferred route here, and we're building the company that way. As you've heard me say before, however, I would expect and suspect that in the next couple of years, if not sooner, as we de-risk this project, somebody's going to probably step up and say, hey, I'd like to come and talk to you guys about a value proposition and acquiring this company. And the management team of this company is not entrenched. If we get a value proposition that is at or better than the go-it-alone plan on a risk-adjusted basis, I can guarantee you that we will bring it to the shareholders and allow them to vote on that as to whether they think we should go it alone or whether we should take that accretive deal that's on the table.
Excellent. Few more words, George, to your actual shareholders and audience members who've joined us here today, and then we'll end it up.
Well, I know it's been a bit of a roller coaster of a journey. I've been with the company 3.5 years, and I think we've made tremendous strides here. We're very happy with the performance that we saw in 2024. It really was a year for setting a very, very strong foundation that we're now beginning to build upon. And I truly believe that 2025 will be an absolutely exceptional and transformational year for this company. So as Nikolakakis said earlier, we certainly are happy to see the share price move in the right direction, but we're still very, very undervalued. I would ask you to remain patient, remain being a shareholder, and I think you're going to see significant returns on your investment from these still relatively low levels. We've all been in the junior mining space for very, very long, and Joanne, you touched on a key point there. Timing is everything, and you need a little bit of good fortune as well. And quite frankly, I think our timing on this is going to be exceptional, and I think we're going to have good fortune as well with that timing. So that's my message, Joanne.
Okay, thank you, George. So we're at the top of the hour. We're going to log off shortly, and just a reminder to everyone to fill out the quick questionnaire before logging off. This really helps us and the company to communicate more effectively with you. And just a reminder that this presentation will be available on the company's website and across all of the VID social media platforms within the next 12 hours. Should you have any other questions, please reach out to Allison. Thanks to everyone who joined us today, and we look forward to seeing you at the next VID Town Hall Forum. Goodbye, everyone.